All right, welcome to the end of the Analyst Month. And in this video, before we move on to the Execution Month, we're going to recap the concepts that we have gone over as well. And we're also going to apply those concepts in a top-down analysis. Now, I've used a Notion for this video, which is the link to that Notion is above this video. You can just copy it to your own Notion, or you can use the PDF file, which is also above this video. And I thought it would be easier to use than a PowerPoint, because if you want to actually use this top-down analysis, then you can also have those set of rules next to you on a different screen when you are actually trading, instead of going through a PowerPoint slide, which is a bit more inconvenient in my opinion. Now, the Analyst Month started with understanding. The video was named First Things First, but it was all about bias. So the foundational levels and what we need to do in order to find that bias, marking out every single PD rate, do you remember? And then through candle signs, through order flow, we could get a good idea which PD rate we might want to trade into next. And that PD rate that then leads to the direction. And when we have the direction, so we have the draw on liquidity plus the direction, that creates a bias, creates understanding where price might want to head towards next. When we have that bias, we now need to find a PD array again. So if we're targeting a premium array, for example, then we need to find a discount array that is going to lead us towards that premium array. That is where the narrative comes in. But those steps are quite easy, and we could have made a 20-minute video on just a bias and narrative alone. But there's a lot of variables going into that. How far can we retrace, which is determined by the resistance as well. Then, are we offering fair value? Are we seeking liquidity? What are the fair value gaps doing? What is the institutional market structure doing right there? Those things are all important to understand to actually learn where the context is and where the best context is, not just any context, because anyone can find any context on any single time frame. But what is the best context? Because we don't want to trade against a lot of resistance, right? We want to find that perfect balance, which is where we went over from video number 5, retracement right there, until video number 9 right there. That's where we went quite in depth. All right, how can we actually find the best price action right there to trade? That is important to understand. And that then, when we find the best price action, leads to context, understanding if we need maybe a little more confirmation instead of just going for the first context area. And that also led to a video further targets, which where we are right now, the Analyst Month video right there. So that is how we designed the videos right there in hopefully a good understanding of how the videos are in the right order. Now, before we dive into a top-down analysis, it's very important to understand what type of trader do you want to be. You don't need to know this exactly right now, but just understand that if you want to be, for example, a position trader, and a position trader is someone who might hold trades for months. If that's the case, and you look at order flow on the monthly time frame, then you might look at CS candle signs on the yearly time frame. So if you are a different type of trader, that's perfectly fine, because I do not want to force you to be a certain type of trader. That really depends on your personal preference. How is your lifestyle currently? Do you have a lot of time? Do you not have a lot of time? All those type of things that we're going to eventually go over in Execution Month as well. But then it's important to understand that the concepts, they stay the same. You are just going to use the concepts on different time frames. So you might actually look at the yearly time frame instead. I would advise stick to the same exact time frames that we have gone over thus far. The 1 minute, 5 minutes, 15 minute, 1 hour, 4 hour, daily, weekly, monthly. If you are going to be a longer term trader, which for example, I like to do on stocks, then you can as well incorporate the yearly. That's the only time frame that I would add into that list. Then I am mainly going to go over scalping, which is a little bit debatable because we have two types of trading plans. And yes, we have a whole lot of trading plans that we can trade afterwards, but at the core of all trading plans, there's two types. You have a filtering process trading plan, which is where you go over a lot of pairs, a lot of instruments, and you find the highest probability instrument to actually trade. Then you also have a flow trading plan, where you only go over one single instrument and you trade that instrument every single day. So the way you approach those are also going to be a little bit different. Now, before we dive too in depth on that, that's all things we're going to go over in the execution month as well. So for scalping, you're most likely going to be a flow trader. So the top-down analysis is most likely also going to be a little bit different, where this top-down analysis is mainly focused on a filtering process trading plan. So finding the highest probability pair, highest probability instrument to actually trade. And that's important to understand because there will be a slight difference in top-down analysis, which eventually we're also going to go over. So this top-down analysis, you can see it as a pure general rule of thumb, where a lot of things we have general rule of thumbs, but there's also quite a lot of variables to it because they change depending on what type of trader you also want to be. So for day trading, for swing trading, that is also, this approach is a good approach. For scalping, again, it's slightly different, which we're going to go over later on as well. Everything above that is where you can do the same, but you would use the concepts on a different time frame. And the reason I mention that is because order flow, institutional market structure, for me is not relevant on the monthly time frame. I do not care where the next 5 candles are going to go. I care where the next monthly candle is going to go, because in that next monthly candle, that's what I want to capitalize on. That is very important to understand, so we don't waste our time trying to find out where the next 5 monthly candles are going to go, which is quite futile unless you are, again, a position trader that wants to know that and that wants to hold trade for months. Now, from that understanding, we can now dive into the top-down analysis we see on the left side of our screen. The first thing I always do in a top-down analysis is I check the economic calendar. And what do I mean by that? Remember when we talked about those news days, very slightly, we briefly touched on it in the Analyst Month, but we're going to dive deeper into the execution month. But for top-down analysis, to again, not waste our time, we need to understand where we have news. Why is that important? News brings volatility into the market. So if we are looking to trade Euro US dollar, for example, then I would love to have US dollar red folder news and the reason for that is because then it is actually going to have some kind of movement most likely. So when then price plus the time, and the time is the economic calendar right there, agrees, then we can actually have a significant move lower or higher. Otherwise, there's a high chance that it might just consolidate, where price can still be nice, but if it does not have news supporting the ID, then that day might give you a fake setup. And what I mean by that is oftentimes when we do not have news supporting the ID, it can give you a setup, yes, but it doesn't follow through. You're now stuck in a consolidation. Now your stop loss is hit, or it takes ages for it to move somewhere. That's what we want to avoid. Now, the way I look at my news is right here. I use forexfactory.com, and I would also highly advise to use forexfactory.com. You can use other tools like MyFXbook, for example, but they have their own news as orange folder news, as a medium impact. So that already I don't take that serious anymore when you regard your own news as an orange folder news. So I stick to Forex Factory. I think it's more professional right here as well. Then the way I have filtered this is the following. If you want to click on the filter, then that right there is the funnel, the little funnel at the top right. Then right here, we have the red folder news. I want to see those. I want to see the orange folder news. I don't want to see the yellow folder news. I don't really care about that unless I'm trading crude oil and there's crude oil inventories. Then I do like to look at yellow folder news as well. Then I have everything ticked on right there. Everything's on. And for the currencies, the only one I don't have on is the China right there, is CNY right there. For the rest, everything is on as well. Then right here, what do we see and why is this important? On Monday and Sunday right there, we have a lot of bank holidays. That already means to me that, okay, I want to be a little bit more careful on that Monday, not super interested in getting involved right there, because with a bank holiday, there's also likely going to be a little bit of a lack of overall volatility. Now, we do have US dollar red folder news right there. We have some Canadian dollar news. We have some Australian dollar news as well. Euro news on Tuesday right there. US dollar news. Perfect. Okay. Then on Wednesday, we have again US dollar news. And Thursday, CHF, US dollar as well. Friday, CHF, GBP a little bit. Then Friday as well, Canadian dollar right there. And we have US dollar NFP on Friday. Now, big three news events, we have not gone over that just yet. But big three news events for the US dollar, is when I'm talking about big three news events, I'm talking about the US dollar, is NFP. So that's non-farm employment change right there. That is NFP. Then we also have CPI for US dollar. So not for any other pair. CHF CPI, don't really care about that. US dollar CPI, US dollar FOMC statement as well. And those big three news events is what I want to avoid the day before and the day itself. Only after the news release, I want to look to get involved. So right here on this Friday, right there, after 8:30, after we have the news release, that's when I'm looking to get involved. But we do have unemployment claims on that Thursday for the US dollar as well. Is that interesting to trade? No, I do not want to look to trade that right there. I want to avoid the day before, and on the day itself, I want to avoid trading before the news release, and on the news release itself, after I can potentially look to get involved. So it's already 2 days filtered out. Monday is also not that interesting right there because we have a lot of bank holidays. So I already know my main trading is going to be done right here, potentially on Tuesday and Wednesday right there. If Monday has a really good opportunity, then I might look at some of the US dollar as well on Monday right there. Now, when we then move on to the crosses as well, we can understand right now, we can look at Canadian dollar, Australian dollar, we can look at euro right there, we can look at CHF as well, and some of the GBP right there. So let's go back to the chart. Now, back in the Notion and back on TradingView as well, I have written down at check the economic calendar, I have US dollar, I have Australian dollar 1, I have Canadian dollar, euro, CHF, and GBP 1 as well. Why have I written down that 1? Well, usually when we only have one economic calendar news event for Australian dollar and GBP, for example, then if I'm looking to trade JPY, which has no news event at all, then GBP JPY, which only has one singular news event throughout that whole week, then that only has one singular day throughout that whole week where I can look for trades, because I'm always looking for trades on a day where we have the economic calendar news supporting the ID. So if there's only one specific day, I do not really like that. I want a little bit more volatility. I want it to be less specific. I want the volatility more to be spread out throughout the whole week, which is what we have on US dollar, Canadian dollar, euro, and CHF. So that leads me to as well find the higher probability pairs which have a little bit more news, and that is where I'm going to remove Australian dollar right there and GBP right there, which leaves us with US dollar, Canadian dollar, euro, and CHF right there for the remainder of this week. So what do we do next? Well, first we go over, as I like to call it, the Forex majors. Forex majors right here, and all the majors is in this forecast list right there. Now, we have the indices, we have the Forex majors right there, then we have the metals, and then we have other right there. Do you need to go over every single one of them? No, you can also pick 5 of them and go over them every week, because I'm going to go over quite a lot right now, but that is purely to show you how I do a top-down analysis. It's not you need to copy my exact thing right there. You need to go over all the pairs that I go over, because that might be a little bit overwhelming at first. So you can also filter it down a little bit. If you want to filter it down a little bit, I would advise to bring some variety into it. What I mean by that is I would go for maybe 3 Forex pairs. So that is Australian dollar, US dollar, EU, and GU. That would be my advice. Then maybe go for 1 or 2 of the metals right there, and go for some of the crosses. So 3 cross pairs, because then you are not reliable on what the US dollar actually wants to do. So before we go into the crosses, we need to understand how we approach right here this forecast list, which by the way, you can also find again above this video. Now, first things first, we have gone over the economic calendar. So what is the next thing we need to go over? We need to find the drawn liquidity right there through candle signs. Start on the monthly time frame. This is how I approach it right here. So I start on the monthly time frame, and through candle signs, I find the drawn liquidity. How do we do that again? Well, if we go to the previous slide right here in the Notion, we saw We had the bias, the candle size. Which steps did we take again? Well, the first thing we actually did, we marked out every single premium and discount rate that we had on our chart. And then we looked, all right, well, which one is more likely to get traded back into? And I think we can both agree it's more likely to trade back into, based on candle signs, the premium raise right there. We're coming off the previous month's low, which we are respecting right there, to now target the previous month's high right there, and as well the swing low that we are currently leaving behind. We can also mark out these premium rates, but they currently are not that relevant. They will be relevant once we take out those premium rates right there. So let's go back to the top-down analysis. We start on the monthly time frame right there, find drawn liquidity through candle signs. Perfect. What is the next step? To draw liquidity, find an FVG. Okay, what does that mean? Well, towards that drawn liquidity, we now want to find a fair value gap that supports the idea of trading towards that drawn liquidity. That is order flow. That is where we have the intention supporting the idea to actually trade towards that drawn liquidity. So right here, we go into the monthly, into the weekly, and we see those same premium rates right there. Perfect. Let's use this first premium rate just to keep the chart a little bit clear right there. And let's see how we can deliver there. Do we have a fair value gap? Perfect. We have a fair value gap right there. So that is the fair value gap where we can potentially push higher from. But this is the only first part. And again, I mentioned in the beginning as well, the bias, the narrative, I can potentially make a 20-minute video on that and we would all understand it. But there's so much variables going into it, because can we actually trade back into that weekly value gap right now, or will we already continue higher? Well, if we already want to continue higher, I ideally want to find right now a fair value gap on the lower time frame to already continue higher from. So a fair value gap on the time frame below the weekly right there. So let's ask ourselves first a few questions. Is there a lot of resistance? No, there's actually on the weekly time frame right here, there's no more resistance. So that means that potentially price can run quite fast right here already. All right, is there a fair value area? I would argue on the weekly right here, we're not really dealing with a fair value area. Potentially this one, but that's very premature and I wouldn't mark that out just yet. What is the order flow / market structure doing? Well, if we look at a bigger picture right here, we can argue that this intermediate term low right now is actually confirmed. So we can potentially target even this intermediate term high right there. So what we already saw on the monthly. So the institutional market structure and order flow right here is already supporting the ID. If in the top-down analysis right here, I follow quite simple steps, a lot of it is already ingrained into my mind. And that is also eventually what we're trying to get to for you. I do not pay attention to a lot of market structure, to be honest, but I know a lot of people like market structure. I pay more attention to order flow. If you follow this top-down analysis right here, and you notice that certain steps you do not pay attention to, not deliberately, but it doesn't resonate with you, that's perfectly fine. That is perfectly fine, because I right here have made a top-down analysis that resonates with me. So if you don't like paying attention to a fair value area, if you don't like paying attention to an order flow, and you notice that by potentially, again, not on purpose, but you ignore it a little bit, perfectly fine. If you can still get to an accurate drawn liquidity, that is perfectly fine. You don't need those other things then. Just stick to whatever resonates with you. And the reason I mention that is because I also learned a top-down analysis before I got to this stage. And I learned top-down analysis through someone else as well. So the first time I learned top-down analysis was through ICT. And he had a list over the steps that he would go over. And I thought, well, if I just exactly follow that list as well, then I should get to the same drawn liquidity. But it just didn't resonate with me. It just was so much that I didn't like it. So that's where you can, again, put your own twist on it. But use the same concepts, use the same things that we went over. Don't incorporate anything else right now that is not in the mentorship, because that is going to mess it up. So right here, we can answer those questions right there. And there's a reason why there's a line between the first 3 questions and the second 4 questions and the 4, 5, 6 questions right there. That is because the 4, 5, 6, they are more intuition questions. They are not the mechanical questions anymore. So this is where you can now determine, all right, Can we trade back into that fair value gap? Do we have a lot of resistance going against us? How far can we retrace? That's again all the videos that we went over in between or after that bias and that narrative, which is quite important to understand. So then after, at number 7, we again do have that mechanical question, is there a context area? Now, first things first, right here, can we trade back into this weekly fair value gap? Well, I believe, if I'm being honest, I do not think it's very high probability that we are going to trade back into that weekly value gap before we reach this high right there. And potentially after that, that high as well, if we want to run this liquidity and not sweep that liquidity. So I personally would like to find already a fair value gap that is going higher on the daily time frame right there. So let's look at the daily. Do we have a daily fair value gap higher right here? No, we do not. We do not have a daily fair value gap higher right here. I do not count a volume imbalance. That's not a fair value gap for me. So right here, can we go into the 4-hour time frame? Well, you potentially can go into the 4-hour time frame. I have written down, can't find an FVG, can't find a fair value gap. Daily is the maximum. So ideally don't go into the 4-hour. But if you already understand where price might head towards, then a little bit advanced understanding. And this again is purely why the top-down analysis is very general, as in it's very general rule of thumb, top-down analysis wise, because if you are a little bit more advanced, you're going into the more scalping phase, then you can indeed go into the 4-hour to find a little bit more clear and more details right here. If we can get a 4-hour value gap higher right there already, then we can look to continue higher right there towards the premium race. So I've written down daily is the maximum, but that again is as just a general rule of thumb. So play around with that, see what you like in that sense as well, because I can't force a top-down analysis onto you because that is not how trading works. We can't all trade the same strategy. We might get to the same draw liquidity, but in a little bit of a different style. And that is what makes us unique as well. And that is so important in trading, because if you just copy someone else the exact way, then that's not going to work. Yes, of course, copy me in the concepts I use. That's important. But in top-down analysis, give a little bit of your own twist to it as well. Now, from here, do we have a clear context area, or do we have a clear fair value gap that we can currently continue higher from? Well, potentially the weekly value gap. But again, like I would argue, that weekly value gap is quite far of a retracement to make to then continue higher already. So that doesn't make a lot of sense to me. I believe this might be a breakaway gap right there. So I want to find on the daily, on the 4-hour, a fair value gap where we can continue higher from. Not on the 1-hour, I want to cut it right there at the 4-hour. So on the 4-hour, do we have any fair value gap that we can continue higher from currently? No. So what do? We simply wait until we get either 4-hour or daily fair value gap higher right there, which we can potentially continue higher from. And if we do not get that, perfect. Then if we never get a 4-hour daily fair value gap higher, then we get a weekly fair value gap right there to then potentially continue higher from. Perfect. So here it's still waiting. It's not ready to look at a context area just yet. So if there's not a context area just yet, you can now filter for an interest list. And this is the filtering process. A filtering process is you put all the pairs and instruments into one big funnel, essentially. And at the bottom, only the highest probability, the best instruments, they come out. Where everything else gets filtered out because they are not high probability just yet. We start with the dollar right here to see if the dollar is already high probability or low probability. And if the dollar is already high probability, we can look to trade all the majors right there, the indices, Forex majors, the metals, because they will also likely be high probability. The drawn liquidity right here for the dollar is quite clear, I would argue. It's quite a clear drawn liquidity. I think I can confidently say we will trade back into that premium rate and that premium rate as well. Is there a clear narrative? Is there a clear area, clear discount rate where we are going to continue higher from? No, not yet. So that also leads to the understanding there is no clear context area just yet. So that in itself is already not something I am likely going to trade on a Monday. I'm going to wait that Monday to see if it can create that for then Tuesday, potentially. And if we do find a pair that already has everything set on that Monday, then that is going to be at the top of the interest list, where it has a bias, it has a clear narrative, it has the context area. Perfect. That is the one you want to be trading the next day. So Right here on the dollar, it's interesting, but it has the potential. So oftentimes what I do with these pairs and these instruments, when it has the potential, so the drawn liquidity is quite clear, but it doesn't have the narrative quite clear just yet, I put it on the waiting list. Not on the interest list, it's one step before that on the waiting list actually. So for example, I use the colors right there, the flags, where red for me is the short interest list, then green right there is the long interest list, so if I'm looking to buy or short, and then the orange list right there is the waiting list for me. Those are instruments that have the potential, but they are not that interesting just yet. So right here, if we then move on to the indices. Now, you will notice the further I go on in this video as well, the faster I am going to do it. I do not follow a list in all honesty. I do not have a top-down analysis list next to my next to my chart, and I follow that. And that is also the point we are trying to get to for you, because you do not want to have a top-down analysis list next to you. Maybe in the beginning, yes. That's why I've created this notion right here with a quick few steps, where the most important steps are the first 3 right there, and then your intuition comes into play, your experience. Okay, how far can we actually trace? And then it comes, do we have a context area where we can actually look for an entry already? But I do not go over a list anymore, because the longer the list as well, the more likely it is that you are not going to pay attention to it, that you're not going to read it before you actually dive into the chart. And that's no shame, because that is just how humans are. That is just what's convenient for us. As in, we do not want to go over a whole book, and we do not want to read 5 chapters of a book before we actually start trading. We just want to dive in and know what we should do. So we should ingrain this list right there into our mind, and then eventually that intuition, that experience starts to take over as well. So right here on the monthly on Russell, if we do follow the list a little bit right there to not make it too confusing, but again, at the end, you will see me go over this quite fast, because you will get to a point, and the same point as me, where you will do a top-down analysis and you can do it in 5 seconds. In 5 seconds, you can tell already if a pair or instrument is interesting. And I'm not exaggerating. If you take more than 1 minute of your time, and you need more than 1 minute of your time to find an interesting or to find a good looking pair that you can potentially trade, then that's too long. So if I look at an instrument right here and I can't find anything clear within the first minute, then I throw it away. I'm not interested in that. I'm very picky about my price action, especially when you go over a lot of pairs, you can be extremely picky. So do not be ashamed, or do not be afraid, essentially, to throw away pairs and instruments. If they're not interesting, they're simply not interesting. Don't trade them. Perfectly fine. Don't feel that fear of missing out right there. So Russell right here on the monthly, we have reached already this high right there. It's quite important for me to understand. And we reached that high as well. So potentially the next high is that right there. We're opening with a new candle on the monthly. So I know that previous candle high is also quite interesting. That's the only real pre-ray. I already like this less than the dollar right here. So on the weekly, do we have a weekly value supporting the ID to continue higher from that? Not really. We don't have a weekly value, potentially in the making right there. But we also have the weekly pre-ray, which we can potentially target. And on the daily, do we have something interesting? Well, we have this daily value gap right there. That daily value gap is where we can potentially continue higher from. But right here, I do not want to immediately go into the lower time frame of that daily value gap right there. I would like, when we do come into that, a little bit more confirmation. Just purely because I'm not too certain on the drawn liquidity anymore right there. So if we do come into the daily value gap, then a 4-hour value gap or even 1-hour value gaps higher off that would be interesting to me as well. This, if it does not want to trade back into that, we already saw on the 4-hour, we have this 4-hour value gap, which we can also potentially continue higher from. So you can potentially see, compared to the dollar, this is a lot more 50-50. I can't really, personally, I really can't get to a very obviously, stupidly clear drawn liquidity. And when you want to trade something, there's a general rule of thumb that I live by. And you'll see I mentioned this in very old videos actually. The drawn liquidity and where we are going to trade to, where we are going higher off of, should be so stupidly clear that you can get a 4-year-old to also see it. That's how clear something should be. if it's not that clear, you do not want to trade it. Price action, and when there's an opportunity, it should scream at you, as in it should be there and it should almost be, you can't miss it. It should be so obvious that we are going to continue higher off of that certain discount rate towards that drawn liquidity. And if that's not the case, then don't force it. As soon as you start to force an ID, then it's not going to be a good ID. IDs are forced the more you look at charts. And what I mean by that, the longer you stare at the chart, the more likely you are going to do something that you should not be doing. The more I stare at Russell right here, and the longer I stare, so if I give it 10 minutes maybe, then yes, I can get to a drawn liquidity. Is it going to be a good drawn liquidity? No, because I likely force the ID because I'm staring at that chart for so long. That's why eventually when we start to get to trading, your chart time is likely not going to be very long. When I take a winning trade during a day, it's maybe a maximum of 30 minutes in that day that I actually look at the chart. That's it. Because that is not because I don't want to look at the chart. Well, we could argue that I don't want to look at the chart. And that is because I don't want to force an ID. And the more I stare at the chart, the more I'm going to force an ID and I'm going to force a trade, which is not something we want to do. So it should always be very fast. If it helps, even set a timer for yourself. And once you go past that minute, then stop looking, move on to the next pair. So right here, I don't think this is very clear on what we are going to continue higher off of. I think there are better fish in the ocean as well. There's a lot of pairs, a lot of instruments that we are about to go over. So I think I can skip this one to then move on to the next one, because I think there is definitely a better opportunity than this one. So instead of forcing anything on this one, I want to move on. ES, let's see, start on the monthly again. What are we doing? We are just continuing higher at all-time highs. With the further targets video, actually the previous video, I don't like all-time highs. And the reason I don't like all-time highs is because I can't get a clear idea anymore of what we want to target. Then we could make the argument, well, can't we use Fibonacci? Something like that. You can, but I don't use it personally. And the reason I don't use it, and I would also advise just don't use Fibonacci, is because it's not too accurate, in my opinion. It's just not accurate enough to actually rely on to confidently say, all right, we can target this level right there. And the reason for that is because Fibonacci oftentimes is combined with a certain price level, with a certain PD rate. So the more relevant thing is that PD rate, not actually the Fibonacci. So right here, if we want to continue higher, then same as Russell, we have this premium rate right there. We're leaving behind some fair value gaps, but not too interesting just yet. On the weekly, we have this weekly fair value gap sitting right there as well. And we have again that premium rate still. So on the daily right here, there's one thing that goes through my mind, that if we now do want to continue lower, then we can sweep this premium rate right there to then potentially target that weekly fair value gap right there. So the premium rate can be fuel to actually continue lower right there. But is that very interesting as of yet? No, not yet. It's not super interesting just yet, because that's a very premature thought. We don't have anything to support that ID just yet. So is this very interesting? Well, potentially if that plays out, could be interesting to place on a waiting list. But in the meantime, I don't want to do anything because it's just simply not too clear on what it wants to do to me. Then NASDAQ, let's see, monthly time frame right there. We have a monthly previous candle high right there, previous candle low. To be honest, on the monthly, based on the monthly right here, that's quite 50-50. As in, I'm not really too sure on what that next candle wants to do right there based on the monthly. So let's get a little bit of a clearer indication on the weekly. On the weekly, we have this candle high, candle low right there. Is there anything clear here? To be honest with you, no. I do not think this is very clear right here. And if the monthly and the weekly are already so 50-50, then the daily, I'm going in with not the most hope, not the most hopeful. So right here, do I think the daily is very clear? No, I do not think the daily is very clear here. And I think it's just one big consolidation right there, which I do not like. So I want to avoid this. You can see I'm very picky about my price action. And of course, for me, it takes potentially a lot less time to get to a clear indication of what that pair, what the instrument wants to do than you. But that is the only difference between me and you in that case, is that I have spent a lot more chart time a lot more hours behind the chart as well. So I've gone through this exact top down analysis for so many times, every single day, every single evening, every single day of the week, every single month, all the time. That is just ingrained into I can see it very quickly. So again, allow yourself to give yourself that time, right? Very important. Now on YM, what are we seeing? Monthly right there. Is it very clear what we want to target? We have that previous month high right there potentially. On the weekly, what do we see? Weekly, yeah, that's now swing high as well. So that could be quite interesting. When the next candle opens, we have this fair value area that we are coming off of, coming higher off of, even the nested order block as well. So that is quite interesting, to be honest. That daily value gap right there, which we can potentially continue higher off of. This YM situation is getting closer to an instrument where I would argue this is almost stupidly clear. This is so obvious that it wants to continue higher right there towards this strong liquidity. We have a clear premium or clear discount rate right there supporting the ID to continue higher off of. In this case, I would argue, right, this definitely is quite clear right here. Going into the 4 hour. In this case, I do not see anything interesting on the 4 hour, just simply a check. Then the daily right there for me is where I would want to potentially see higher prices off of right there. That could be quite interesting. So this is, for example, one I would add to my interest list right there. This is where we already have a context area as well. That daily value right there. Don't necessarily want more confirmation. So if we already want to continue higher, and we can continue higher off of that, targeting the premium rate that we leave behind as well. First context area, going to be that high right there. After that, it's going to be no resistance towards that high right there. Perfect. Quite interesting. Then DAX. DAX right here, I can already tell you that this is not going to be interesting. We are at all-time highs right there. So again, next target could be that previous month's high right there in 2 hours. So I'm a little bit early. Then on the weekly, could be the same. We've just been continuing higher. And when we've just been continuing higher, it's always very difficult to actually look for trade ID. You might think, well, if we are continuing higher, the more obvious it is, right? Well, yes and no, because here, if we are above an all-time high, we don't know how far it can actually go. Then we're either trying to chase price or we're trying to call a top in the market. And both situations is not something you would actually want to do. So I would want to be very careful right here with anything and not necessarily look to get involved. Yes, we can continue higher off the daily value gap, but look at everything that we're leaving behind. We're leaving behind weekly value gaps, we're leaving behind monthly value gaps. It's just really not that interesting to me right here. I would rather have a pair that is about to continue higher or about to continue lower, not has already done it and has already achieved the objective. So to me, that's not interesting. Australian dollar, US dollar. Let's look at the monthly. Now we're getting into that territory where it's all very similar to the dollar in itself as well. So right here, we are sweeping that previous month's high right there. We can potentially target that previous month's low and that swing low right there as well. And on the weekly, what are we doing? Do we have a fair value gap right now supporting the idea of trading towards that? No, we do not. Okay, do we have something on a daily? No, we do not. Okay, and this is where I would get a little bit suspicious. Now, if we are still in daily context or weekly context, for example, at that moment in time, then for me, it's no problem. And moving from that to that low, then for me, it's no problem to actually go into the 4 hour. But since that context right now has been taken, I would not want to go into the 4 hour anymore. So here, 4 hour value gaps are not that interesting to me. I'm not looking at to trade that 4 hour value gap lower. If anything, I would want to wait for more confirmation here in the form of a daily value gap, 4 hour value gap that we actually want to still continue lower. Does it have the potential? Yes, definitely. Is it very interesting right now? No, because we don't have a clear premium rate that we can actually continue lower from. So I would personally want to wait. Yes, potentially, we can sweep some swing highs right there to then continue lower off of that. That is where we can now wait for 4 hour fair value gaps lower as well. So that could be interesting. So again, it has the potential. Then moving on to EU right here. Let's see. Monthly as well. Getting quite clear, right? Monthly, I think. Candle signs right there. I think we can remove the list as well from the left. See? And if we now look at the monthly right here, that swing low is what we can look to target, I believe. And of course, the previous month's low as well, which is already quite close. Then on the weekly right here, what are we seeing actually? We have a weekly value gap right there. again, ask yourself the question, can we retrace back into that before we continue lower? No, I do not think that's very reasonable. Again, based on the fair value video, it's a breakaway gap, most likely. So let's see, can we already continue lower off of something else? Well, we have this daily fair value gap sitting right there as well, overlapping with a fair value area. Perfect. That is quite interesting. So this right here is definitely one that is going on my interest list, as in this is lining up nicely. We have a drawn liquidity, we have a bias, we have a narrative, which in turn also creates a context area potentially right there. If we already continue higher, so that's the thinking ahead. If we already continue lower, and we do not retrace back into that fair value gap right there, then I would want to look at potentially 4-hour or daily fair value gaps already continuing lower. In the meantime, I would want to wait to see if we do want to retrace back into that fair value gap right there as well. Which could be very interesting. Then this is going on my short list on the interest list right there. Then GU, let's see. We are potentially sweeping this swing high right there based on that wick, which means that we can target again that swing low, even this fair value gap right there. Quite an interesting target. See on the weekly, what are we doing? We have a weekly fair value gap right here. We don't have resistance. It's a little bit 50-50 right there. If we do want to retrace back into that or not. It's a little bit more 50-50 than EU right there. We do not have a daily fair value gap supporting the idea already continuing lower. The 4-hour do not have anything. Consolidation right there. Yes, it has potential. I'm going to put it on the waiting list because I'm not too sure if it wants to retrace back into that weekly value gap just yet. New Zealand dollar, US dollar. Let's see. We have tried to continue higher off that monthly order block right there. Nothing too clear just yet. Then previous month's low right there, swing low, which is quite far. Then we have a little bit of an earlier swing low right there. So I like to mark that out. I like the earlier targets right there. Then we also are leaving behind a weekly value gap, which we can potentially continue lower off of towards those targets right there with a fair value area. If we can retrace back into that, that is actually very nice price action. Running into some resistance right there as well. So on the daily, this is not too interesting to me. I do not really want to look at anything just yet, but if we can retrace back into that, or we can already continue lower with a new fair value gap lower, that could be very interesting right there to continue lower as well. I do quite like that. So I'm going to put it on the waiting list as well. US dollar, Canadian dollar. So in scenarios where you open a chart right here and on the weekly you already see price action like this, then for me it's already done so fast, as in I can open a daily chart and already see if I like the monthly time frame or not. And right here on the daily I can already see this has been consolidating for ages. Fair value gaps on both sides of the market have not been following through. So I just immediately move on to the next chart right there. Immediately move on to the next pair. US dollar CHF. Let's see. On the monthly, we can look to continue higher as well. And we can look to target that swing high right there potentially. On the weekly, what are we doing? Weekly, we have a little bit of earlier targets. We have this weekly swing high that we're currently running into. After that, this weekly swing high as well. We have this fair value gap right there, which we can potentially trade back into. That again really depends on what the dollar wants to do. Because if the dollar already wants to continue higher right there, then we can already look to continue higher and not trade back into the weekly value gap. So at this moment in time, what can we do? Do we look for entries right there or wait for that? Well, very simply said, you can just wait. As in, if we already get a fair value gap higher right here, then trade that fair value gap. If we never get that fair value gap, then wait for the weekly value gap to then look for higher prices off of that. So this again is quite interesting. It's quite interesting to potentially look at as well. US dollar JPY. Let's see. At an all-time high right there. And when we reach that all-time high, we're now consolidating on a day. Don't want to trade it. Perfectly fine. We move on. Silver right here. Do we have anything clear on silver? We are potentially sweeping that previous week low. Let's get monthly context as well. Monthly, I would argue, can continue higher a little bit. Now, this is where it's contradicting with the US dollar. So the first DXY that we went over right there. So can that be interesting? Yes, can still be interesting, but it's a little bit lower probability in my opinion. Right here, we do have this weekly value as well. We can potentially look to target. On the daily, do you have anything clear? Not really. The 4-hour, very 50-50 price action for me. I can see it continue lower. I can see it continue higher right here. I would want to wait for more confirmation. Potentially daily value higher being created right there. But even that, it's a little bit of in the middle of nowhere for me. I don't really like that. Gold at an all-time high as well. So if we want to continue higher, we have a fair value gap sitting right there in the making, which we can potentially continue higher from. Since it's at an all-time high, again, I personally just do not like it. Personally, just do not want to trade it. Very simple. Bitcoin. Let's see. What are we doing on Bitcoin? We can potentially reach new all-time highs in the form of this weekly swing high right there. If context wants to follow through right here on the daily, what are we doing? We have this daily fair value gap that we can potentially continue higher from right there. Now, this is where I'm worried a little bit. The reason I'm worried is because right here, if we do want to continue higher, then this most recent candle right here should have been an up candle. There's no reason for that to be a down candle. So right here, we potentially have unusual context to continue lower from, whilst we are still in a bigger usable context to actually continue higher. So here, what is the plan of action? Simply wait. Oftentimes the plan of action is just to simply wait, and if you do want to see any clear indication if we still want to continue higher, wait for a new fair value gap higher right there, or wait for a new fair value gap lower. That's oftentimes what you'll see me do in forecast a lot, is simply wait for a new fair value gap higher or fair value gap lower if I'm uncertain. I do not need to know. I do not even want to know what this pair is going to do. Again, yes, can I get to a clear draw on liquidity? Well, potentially if I now force the ID, go into the 1 hour, go into the 15 minute and really try my best, yes. Do I want to try my best? No, because I think if I do not try my best, then if one really pops out, I'll see that. And that is exactly what I want to see. So crude oil right here. Let's see, monthly continuing higher already. Weekly right here continuing higher as well. Do we have somewhat of a clear target? On the daily, we have reached this swing high right there, I believe. Or just below it. After that, we can reach this swing high and we have a nice daily value sitting there above it as well. So what are we doing right here? On the 4 hour, let me get a clear indication. We are leaving behind the fair value area right there, which is quite interesting, which we can potentially continue higher off as well. On the daily, if we create a daily value gap, that could also be interesting. So here, what do we do? Well, we mentioned we might not want to trade that Monday, right? So I would rather want to wait for a daily value gap here instead to be created, to then go into that daily value gap to look for higher prices. So the 4 hour right here is not that interesting to me right there. I would want to wait for the daily value gap higher instead. Then this again is definitely quite interesting. I'm going to add that to the long list. Bank Nifty. Let's see really quick. Monthly, what are we doing? Not interesting. Weekly, we have a weekly value gap right there, but we were potentially continuing higher. On the daily, what are we doing? Not interesting. It's very 50-50. Don't like it. Going to move on. So this right here is where we move on to the crosses. Now, a general rule of thumb, if the US dollar is not interesting, economic calendar wise, or it's just not that clear just yet, then move on to the crosses. Then the crosses can potentially be very interesting. If the US dollar itself is already interesting and you really have good opportunities on the Forex majors, then you don't need to move on towards the crosses right there. You can simply stick to the US dollar as well. So news-wise, we had Canadian dollar, euro, and CHF right there. So we can already know which pairs we want to focus on. In the cross list right here, then the pairs we want to focus on is Canadian dollar and euro and CHF that have one part of the ticker name. So for example, Australian dollar, Canadian dollar, yes, we have Canadian dollar news. Perfect. Australian dollar, CHF, yes, we have CHF. Australian dollar, JPY, no, we don't have Australian dollar and we don't have JPY. So I'm not interested in trading that right there. So Australian dollar, Canadian dollar, we can start off with that right here. Now with the crosses, be more picky, even more picky than you are on Forex majors. And the reason I mention that is because the crosses can sometimes consolidate as well a little bit longer than the overall Forex majors. And the reason for that is because they just have less volatility. So be even more picky about your price action right here in the crosses. So on the monthly, what are we doing? We have this previous month's high sweep potentially. On the weekly, what are we doing? Well, potentially continue lower towards this swing low right there, even lower right there. We have a daily value gap right there. Can we deliver into that before we already continue lower? That's a bit unlikely in my opinion. That's a bit unlikely, but if we do get that, that could be quite interesting for a short-term target right there in form of that swing low. So I'm going to add this to the short list. Could be quite interesting. From Australian dollar, Canadian dollar, we can move on to Australian dollar CHF right there. Look at the monthly really quick. What are we doing? We have just reached this swing high right there. Okay. What do we do on a weekly? We have a weekly value gap sitting right there. And you can probably already tell that I'm not too convinced on what it wants to do right there. I'm not too interested in this right here on the daily. Can move higher, can move lower a little bit. Ideally, in this case, if I'm not too clear, I just want to wait for a new daily value gap higher or daily value gap lower. New fair value gaps. Whenever in doubt, wait for a new fair value gap. Where I'm not even going to put it on a waiting list because the draw liquidity to me is also just simply not too clear. Australian dollar JPY, can we trade that? No. Australian dollar New Zealand dollar, can we trade that? No. Canadian dollar CHF, yes we can, perfect. Where we actually have Canadian dollar news and CHF news as well. So that could be very, very volatile. Let's see, we had this target right here, this swing high, which is quite far still. Of course, we can always look to target the previous candle's highs right there. Let's get a little bit of a clearer picture. We are running into some resistance right there from that weekly fair value gap right there, but we can still look to continue higher. We are also leaving behind a weekly fair value gap. So essentially what you see me do is I just mark out everything, every PDA that we might have right here. Then we have this daily value gap, which we could also already continue higher off of. We have a nice candle rejection actually. So in this case, we already have context towards that weekly fair value gap potentially, where that's that swing high right there. So in this case, we can already go into the 4 hour right here and even go into the 1 hour to see if we have fair value gaps already supporting the idea of continuing higher towards that high already. But currently I would argue, yes, we have it somewhat, but if we want to trade this next week, then I would still want to wait for a little bit more clear price action as well. Has the potential, but not too clear right now. Canadian dollar JPY. Let's see. On a monthly, what are we doing? Is it at an all-time high? No, it's not. It's not really coming into anything on the left. It's sweeping that previous month's high potentially right there. On the weekly, are we doing anything? Yeah, that's swing high. Seems like we're struggling with that a little bit. But it does seem like we're climbing back above it. We're leaving behind a weekly fair value gap as well. On the daily, very 50-50 to me. Very 50-50. I don't like this price action right here. Not too clear on what it wants to do. I think it can still continue higher, definitely. But it's not something where I'm super convinced on that. Right there. Since we also have a weekly fair value gap right there in the making, which is below that right there. So if we now want to continue higher, then this could be interesting right here. But I would want to see a new 4-hour value gap higher off of that as well. In the meantime, I just want to wait. CHF JPY. Let's see. Sweeping that swing high. So now we are looking to continue lower potentially. Previous month's low. Ideally, we want to create a fair value gap lower as well. Then on the weekly, what are we doing? Weekly right here, weekly fair value gap that we're coming into, which we can continue lower off of. The only thing I don't like is that we are now failing to create a new weekly value gap low right there. We're potentially sweeping this swing low instead. So that again is where it becomes quite 50-50 right here. The 2 candle rejection, if we do already want to continue lower, we should now look to continue lower with new bearish candles right there. If that does not happen, that again is quite suspicious. Could be interesting, potentially later on in the week, if we do get the confirmation that we do want to continue lower already. Which can also be seen by a 4-hour value gap potentially continuing lower right there. Then, do we have Euro or Australian dollar news? Yes, we had Euro news actually. So let's look at this. Monthly, not clear. I'm going to go over it a little bit quicker right now. Weekly, not clear, move on. Okay, Euro Canadian dollar. Let's see, weekly, any fair value gaps, previous month's high, previous month's low sweeps. Yes, I can see that. Weekly, is there anything clear right here? Well, we can potentially continue lower, but it's just been consolidating for a long period of time. Daily, very ugly price action with a lot of consolidations. Don't like this, move on. Euro CHF, let's see. Do we have anything clear right here? Well, we reached some targets, reaching above swing highs right there. So if we can still look to continue higher, well, we have a weekly value actually right there, which we can potentially continue higher off of. And right there, we also now have a quite clear fair value area right there. So this is definitely interesting. I do quite like this, to be honest, where if we can get a retracement towards that, then continue higher off that, perfect. This is also quite clear already on the weekly, where I would now stop on the daily. I would not look at anything else, just simply the weekly right there to play around with that. So that's going on the long list. I do like that. Euro GBP, really quick right here. What are we doing? Because on the dollar, on the daily right here, we've been consolidating for a long period of time. So I do not like that. Do not want to do anything right there. Euro JPY. Let's see. Monthly, potentially sweeping that swing high that we have right there. And on the weekly right here, we have this weekly fair value gap, which we can potentially continue higher from. But after this sweep of that potential high, I do not necessarily like that. Then on the daily, we have this daily fair value gap right there, which we could potentially continue higher from. The 4 hour right here, we could potentially look to continue lower, but it's not that interesting to me. Not that interesting to me. Don't really like this. Euro New Zealand dollar. And the reason I don't like it, by the way, is again, we have that sweep going against us to then potentially look to continue higher. So now I'm determining that resistance. How far can we actually retrace right there? That is quite important, of course. Euro New Zealand dollar. Let's see. On the monthly swing high, which we are coming above. So next monthly swing high could be an interesting target. This right here could be an interesting target. So if we want to continue higher, we have this weekly value gap, which could actually be quite interesting to continue higher off of that as well. So this actually is already quite interesting as well. Going to add this to the long list right there. GBP, Australian dollar. Do we have any GBP or Australian dollar news? Well, we had them both. But look at this price action. I'm not interested in that consolidation right there. GBP Canadian dollar. Do we have anything interesting right here? We reached above that high. And I remember GBP Canadian dollar, so actually it was quite interesting because we were potentially sweeping that high right there. And we mentioned this in previous videos as well, where right here, we are actually looking to follow through off that daily value gap. Last week, we did not have volatility, so that we did not create a new value gap just yet is not that crazy. So right here, I do really like this price action. If we can get a clear premium array, which we can continue lower from, because I do not think we are going to trade back into this daily value gap right there. And this could be really interesting with targets in the form of the weekly swing lows right there as well. And a little bit earlier right there, but we're most likely already going to reach that quite early on. Very interesting on the short list. GBP JPY, don't have to look at that. GBP New Zealand dollar, don't have to look at that. New Zealand dollar CHF, we can look at that on the monthly, not clear. Weekly, not clear. Daily, not clear. Consolidating. Move on. New Zealand dollar JPY as well. We don't have to trade that because we don't have new support in ID. At least that's already what it makes a lower probability. So you can probably see eventually I go over it quite fast. And I just want to as well emphasize the fact there is no perfect way to do a top-down analysis. As in, there is no secret thing that I can tell you right now and you will all of a sudden magically do a perfect top-down analysis. From my experience and from what I see in other students as well, is top-down analysis, and well, that's essentially a huge part in trading itself as well, is that you just need to go ahead and do it and start doing it and do it over and over and over and over and over again, and you will get very good at it and you will do it very fast. But if you constantly switch other concepts around and you think you now need, I don't know, macros, or you think you need inverse fair value gaps all of a sudden, then you're going to start that process all over again. So start with a top-down analysis and just simply go in blindly. You will not be good at it the first time around. You will probably be very wrong the first time around. You will not find the high probability pairs. Perfectly fine. That is what you need to go through in order to get better as well. So this top-down analysis, again, is quite simple because we've already gone over everything you need to go over as well in order to do a top-down analysis. So now there is nothing left for me that I can give you in some way of a secret sauce that will help you with a top-down analysis. Now you need to experience it. You need to actually go ahead and do it. So that is also the practice for the next week. You can also go ahead and do it. And after you do it, you can again compare it to my top-down analysis. And then we'll see, Does not mean that my top-down analysis is already better or that I get to draw liquidity and you can't. No, you might get to draw liquidity better than I can, for example, right? So we can compare the top-down analysis as well. So even if you can, record yourself doing it, and you can practice from that as well. All right, perfect. Thank you.